May I please invite CA Advocate Deenal Shah sir to be on dais, please. Advocate Y. Suryanarayan sir, CA PT Joy sir, CA S. Badri Narayan sir, and CA Vikas Jain sir, please. So today's first session is IBC Crossweb panel discussion on interplay of IBC with income tax, PMLA, customs, MPID, and revenue recovery. Today, we are blessed to have such a great panel with us. On panel, as I said, we have got CA Advocate Deenal Shah sir, Advocate Y. Suryanarayan sir, CAPT Joy sir, and today's panel would be moderated by CAS Badri Narayan sir. So may I please ask CA Vikas Jain sir to felicitate while I introduce the panel to the audience. So in the panel, we have got CA Deenal Shah sir, who is a practicing advocate and a chartered accountant with over 30 years of experience in legal and tax counseling. Deenal sir has worked as a partner with EY, and he has also served as a visiting faculty at IIM. His vast knowledge and experience make him a highly sought-after expert in the legal field of tax and counseling. So may I please ask Vikas sir to felicitate CA Deenal Shah sir. Next, we have got on the panel Advocate Y. Suryanarayan sir. He is a corporate law practitioner with extensive experience in handling complex legal matters. His areas of practice include representations in the matter related to the Insolvency and Bankruptcy Code, FEMA, dispute resolution, and takeover projects and regulatory and policy issues. So may I please ask Vikas sir to felicitate. Next, we have got PT Joy sir, who is also a seasoned chartered accountant, tax expert, practicing since 1999. He is a commerce graduate from MG University and a law degree from Karnataka State Uni. He has delivered lectures in over 730 seminars, and he has authored 2 acclaimed books published by Bharat Law House as well. So may I please ask Vikas sir to felicitate PT Joy sir. So may I please ask Sunit sir to come and felicitate Vikas Jain sir, please. So as, Vikas Jain sir doesn't need any, yes, after that I've got. So he doesn't need any much introduction, but as part of the process, Vikas sir has delivered more than 300 talks in various branches, and he's a RCM as well. And he's also running a noble cause. He's running an NGO in the name of Uplifting Lives, which is a really great initiative. And last but not the least, may I please request Sunit Shah sir to come and Sunit Shah sir and Vikas Jain sir to felicitate S. Badri Narayan sir, who is also a seasoned insolvency professional as well as a chartered accountant. So please, round of applause, please. So great. Let's rock on with the session, and all the very best, and have a fun in participation. Thank you.
A very good morning to all. I hope I'm audible. So
Hello.
yeah, we are already running late, so I'll cut it like to very crisp questions. Before, when we made this panel and when we discussed the topics, we reached out to a lot of insolvency professionals, lawyers, and understood the core issues which come in interplay of IBC and other laws. So as we know that Section 238, Section 14, that has been there since the beginning in IBC. And when a RP comes into the picture, he has to deal with a lot of other laws, and there is always an interplay there. And with IBC playing its role practically over the 7 years, there has been a lot of judicial precedents also. So now we have an eminent expert panel touching on various different aspects, like we have on indirect and direct taxes, and we have MPID Act, we have Revenue Recovery Act, we have PMLA. So we have just tried to cut down to very crisp questions, and we'll take them one by one without wasting any more time. So Mr. Tinal Shah is here. His innovative judgment was the first one, which laid down the supremacy of IBC. And there it was a conflict between IBC and Maharashtra Industrial Undertaking Act. So I'd like to know from Dinal Bhai the journey of IBC in the interplay from innovative judgment to date. What is his perspective?
Thank you. So good morning, everybody, and thank you to Branch and the Institute for giving this opportunity, and all my colleagues. The innovative judgment and Section 238. So the innovative judgment was in relation to whether a state act will prevail or whether a central act will prevail. And it was about the Maharashtra Relief to Depositors Act. And the Supreme Court said that ultimately the central act would prevail. But between that judgment and today, there is a reasonable jurisprudence which say that Section 238 will prevail, which is not inconsistent with the other law. And then over the past years, you have Section 32A now, which also was introduced subsequently. And therefore, if you take today, general jurisprudence is that the IBC will override unless it is inconsistent with the other law, including the Income Tax Act. We have certain interesting issues on Income Tax Act which we'll discuss later on. But my personal view is that from a Supreme Court jurisprudence and from a law, both if you read together, there is a general acceptance with the professionals and the judiciary and the stakeholders that the IBC will ultimately override the other laws. Thank you.
Thank you. Now moving on to Advocate Surya Narayana, sir. I will shortly call you as Surya, sir, during the conference. Sir, what are your broad perspective on the interplay with various laws and specifically Section 238 of the Code?
See, Section 238 and Section 14 have been there from the inception of the Code. Now, when Section 238 was enacted, the Parliament was very well aware and conscious of the fact that there are other laws that are existing, and therefore there has to be a non-abstent clause in this code. Now, when it comes to Section 14, the moratorium, we are all aware that a corporate debtor operates in an economic environment. And when an entity operates in an economic environment, there is always, regulation, and it also operates in a legal environment. There are various laws that are applicable on a day-to-day basis to a company or to an entity which is operating in an economic environment, be it taxation law, be it a socio-economic law, be it a labor law. So, when moratorium is announced, the main intent is to keep the entity, preserve the assets, protect the assets from any kind of action by any authority or by any financial institution. So if you look at Section 14, it says institution or even continuation of any proceedings. And then any action to foreclose, enforcement of any security interest, and mark the word including under the SURFACE Act. That means not just SURFACE. It is including SURFACE Act. So therefore, any action to recover, enforce a security interest will be barred by virtue of Section 14. And always there are questions as to whether an action that is initiated before the commencement of the CIRP but completed after the commencement of the CIRP, whether 238 and 14 read together would prevail. So there are very interesting case laws which we will be discussing.
Thank you, sir. Now, coming to fellow insolvency professional who will be the best to answer this from a practical viewpoint. Vikas bhai, what are your top thoughts when it comes to interplay of IBC? What challenges does an IP face?
Thank you, Badri bhai. So, firstly, as we all know, that these 4 sections are most important when it comes to interplay. One is section 14, that is moratorium, just sir said. Another is 238, that is the overriding this section. Another 32A, which General bhai just said, which was introduced later. And another section is 17.2E, which says that as an insolvency professional, we have to take care of everything of the corporate data, especially the compliances. So we are very much required to follow all those compliances. So the world of compliances is too big. May it be income tax, may it be GST, that we have to ensure, also the labor laws, and these days after PMLA, enforcement director, ED also comes into picture. So n number of things that are to be done. I would say that we have to enter into the, or step into the shoes of the CFO. Whatever a CFO is doing, all these things we are also required to do with respect to that corporate data, whatever all these are to be done. And see, the immunity which is available, I would say 32A if we see, then whatever the past non-compliances or whatever are done by the previous management, yes, immunity is given to the resolution applicant. But what about the IP? Then it is always a challenge for the insolvency professional to all those things. Yes, there are another questions also, we'll discuss the things later then.
Right, thank you. Now, since Vikas ji talked about PMLA, we have an expert on PMLA, and which has reached, a lot of interesting perspective on PMLA IBC have come. So I like to ask Mr. P.T. Joy that both PMLA and IBC are special legislations. So can you just tell us what the current legal standing is in this interplay, and maybe some provisions very crisply what will be useful for understanding?
Thank you, Mr. Badri. If the entire this particular session can be compared with a movie, in a movie there is, let us say, the story part, the romantic part, and there is the action part. The action part of the movie, it can be compared with the PMLA, maybe because of some of the off-late happenings in our country. When we say PMLA, people, they are very eager or maybe very, very anxious to listen to or maybe to look at. PMLA as a legislation, as a piece of legislation, once if you download, it is only some 75 sections. Except for some 5-6 sections for which all the actions are happening in our country, other sections are only peripheral sections. Now the interplay between PMLA and the IBC, because of the attachments happening prior to CRP, during the CRP, and maybe always the authorities. Maybe to clear maybe your understanding, under PMLA, in fact, there are 2 authorities, there are 2 prominent authorities. Now we have an understanding that, so our notion it is that, anything under the PMLA means enforcement directorate. Anything under the PMLA is not enforcement directorate. One, it is Directorate of Enforcement. The other one, it is Directorate FIU, Financial Intelligence Unit. As far as collection of information, dissemination of information, sharing of information with other regulatory authorities, government department, governmental agencies, it is vested with the Director FIU. But as far as attachment, now confiscation, punishment, arrest, etc., maybe the action part, that is, it is vested with Directorate of Enforcement. Now, interplay between IBC and PMLA, there are attachments happening prior to CRP, during the CRP, etc. The question it is, there is provisional attachment and permanent attachment. Provisional attachment, it is done by the Enforcement Directorate. Permanent attachment, it is after the order of the special court. More and more, in many of the case laws, by the NCLAT and by some of the high courts, they are coming and saying that the attachment, the provisional attachment, is an attachment of a civil nature. It's not a criminal activity. It is not an activity relating to a criminal thing. So the provisional attachment, being an action of a civil nature, will not prevail because of section 14. Because of section 14. And ultimately, there is a case that is pending before the Supreme Court, Apex Court. It is Ashok Kumar Saravagi case. Interim judgment, it has come in Ashok Kumar Saravagi case. The Supreme Court said, Honorable Supreme Court said, before approval of the resolution plan, you come back to us, there is an attachment, you maintain the status quo, attachment by the ED, maintain the status quo. Before approval of the resolution plan, you come back to us. Without our prior permission, don't approve the resolution plan. Once the Ashok Kumar Saravagi case, the judgment it is pronounced by the Supreme Court, the entire issue, the who is supreme, whether the PMLA is supreme or the IBC is supreme. Now that issue will be ultimately settled, but as of now it is pending before the Supreme Court.
Thank you, sir. Thank you. Since you spoke about provisional attachment and absolute attachment under PMLA, something very similar we have in MPAD Act also, which we'll talk with Surya sir later on. So before going to that, we'll talk a bit about income tax perspective from Dinal sir. Sir, please advise us relating to ongoing assessment proceedings. You know, a lot of RPs face this issue that there are ongoing proceedings. How to handle that? What are the roles of RPs in this? And what will be the impact of moratorium vis-a-vis those proceedings?
So, Badri, let me combine two questions of the pending proceedings, and also some friends were inquiring about the search and seizure operations which has undertaken either in the past, which are ongoing when the corporate debtor is admitted for insolvency. So first, as an RP, it is my responsibility to comply rules and regulations of all applicable law. So if certain search proceedings are undertaken and the tax department is inquiring about certain information, collecting certain information, I would believe that I would be obliged to share that information to the extent possible for me, to the extent available with me. Even if my statement is taken as an RP, I would be obliged to give that statement under 131 or share an information in the 133(6). And I don't think that I would have an argument to say that I did not know what happened till yesterday. Because once I take over a role of an IP, it is my responsibility, including for the past actions. The next question would come about section 14 of proceedings. What Supreme Court said in ABG, that when certain proceedings are continuing and information is called for, it is a responsibility of an IP to submit all this information and let the government determine the quantum of demand or quantum of the penalty. Having determined the amount of penalty or quantum of demand, by virtue of section 14 during the moratorium period, the department may not be able to recover that amount. But there would be a difference between determination of a quantum and recovery. So once a company is admitted to IBC, the assessment proceedings will continue, or including the search-related actions. And then, if X amount is determined to be payable based on those actions or assessment order, the department may not be able to recover by virtue of section 14. So that's the first thing. And my personal view, all search related information, including transfer pricing assessment, including the tax assessment, the insolvency professional is obliged to share this information to the extent possible and available. The second and the most interesting question now is that hypothetically, a resolution plan was approved on 1st of April 24. What happens to the demands which has crystallized prior to 1st April 24? And the second situation where the proceedings were on, but demand did not crystallize prior to 1st April 24. So there were reassessment proceedings, there were 148 notices which were issued prior to 1st April 24. Demand will crystallize. It was under the moratorium. The claims were submitted, and then ultimately the plan is approved. And then the new RA will make the payment as per the plan. That position is reasonably clear today, and I don't think there is any dispute on that, including Supreme Court Ghanshyam Mishra confirms this. But a new twist which has come now is that if the assessment proceedings had started prior to 1st April 24, but the assessment order determining rupees 100 is passed on 1st of May 24. What happens to that demand? Or the new notice under 148 is issued for the period prior to 1st April 24. So for example, assessment in 1920, now all of us are aware that for 148, assessment can be reopened for 10 years. And therefore, it can go back to 16, 17, 17, 18, any years which can be reopened within the provisions of the amended law under 148. Till March 24, there was a reasonable clarity that based on Supreme Court judgment of Ghanshyam Mishra, a judgment of Bombay High Court in Murli, a judgment of a Delhi High Court in Tata Steel, a Gujarat High Court judgment at the GST on Ultratech Cement, that even for the demand crystallized after the approval of the resolution plan, but if it pertains to the period prior to 1st of April 24, which is approval of a resolution plan, or new notice is issued after 1st April 24 for the period prior to approval of a resolution plan, I should be saved by the Supreme Court judgment of Ghanshyam Mishra and Section 31. Coincidentally, the Gujarat High Court delivered a judgment in March in the case of Surya Exim Limited, where the Gujarat High Court did not agree with the judgments of the Delhi High Court, including the judgment of a Gujarat High Court in the case of GST. The Gujarat High Court took a view based on Ghanshyam Mishra judgment and definition of word claim under Section 3B of the IBC, that claim would mean only liabilities which is crystallized, and it would not include liability which is not crystallized prior to approval of a resolution plan. And therefore, Gujarat High Court did not accept the arguments of the petitioner. And therefore, as of now, Gujarat High Court has not followed, based on their own interpretation, that liability which is crystallized after the approval of the resolution plan, that would not be survived or protected by Ghanshyam Mishra of Section 31. The judgment as of now is stayed by Honorable Supreme Court. And therefore, let's see what finally Supreme Court decides in Surya Exim. My personal view, if you read Section 3 small b definition of claim under the IBC, it uses the word disputed or undisputed. The second principle, again, a jurisprudence of a clean slate to the new resolution applicant. The third argument is, and it is more from an income tax perspective, that income is determined and the tax liability is determined on 31st March of every year. It is discharged subsequently. And therefore, based on these principles and argument, I would believe that ultimately Supreme Court should reverse the Gujarat High Court judgment. But as of now, the Gujarat High Court has taken a different view, and the Supreme Court has stayed this order. As regards the search-related assessment, the same position would prevail, because now, after 1st of April 21, even in case of a search, the notices are issued under 148 only, and therefore, the same principle would follow, that if the search has taken place prior to approval of a resolution plan, the liability is not determined, but is crystallized post-approval of a resolution plan, then having regard to Surya Exim, subject to Honorable Supreme Court decides at later point of time, this will be an interesting issue to watch. Thank you.
Thank you, sir. I think you touched on the pain point which is happening right now to RPs, and that's very helpful. I mean, we'll wait for the Supreme Court judgment on that. Before I move to Surya, sir, on MPAD, I'd like to ask Mr. P.T. Joy that in PMLA, like we are talking about provisional and absolute attachment, please tell us what an RP should do. Two situations. One, provisional attachment happens before CRP, absolute is during CRP. Second, both happen during CRP.
This is an expected question or a question that we all have in our mind. See, how do we deal with a case where there is an ED attachment during the CRP process? More and more, it is coming to a conclusion that there is a provisional attachment of 180 days and there is a permanent attachment when it is ordered by the special courts under the PMLA. Now, 2-3 cases NCLAT and one case High Court also said the provisional attachment is an action, is a civil action. It is not a criminal action. Or at the stage of the provisional attachment, no crime that is proved. There is no, let us say, the crime, or as we call it as the scheduled crime or the predicated offense as stated in the schedules to the PMLA, it is not established at the stage of the provisional attachment. So it is civil in nature. If it is civil in nature, then section 14 can save you. But if it is criminal in nature, then there is an exclusion. But now in March 2024, there is a judgment by the Bombay High Court. It is Shivacharan case. They said, no, once the resolution plan it is passed by the COC and approved by the NCLT, even if it is a permanent attachment, you will have to release the property because of section 32A, not because of section 14, because of section 32A. Basically, see, in the case of Solidaire case, the Supreme Court said, if there is a subsequent enactment will, with respect to the same subject matter, the subsequent enactment, piece of legislation will prevail over the earlier enactment. There they relied not on section 238, but on section 32A, inserted with effect from 2019. They said, as far as the new management it is concerned, they have not abetted anything. They were not involved in conspiring and all. They cannot be held responsible. That's what the section 32A says. So once the resolution plan it is approved, even if it is permanent attachment, the ED has to release the property. Then the question it is now during the stage, before the resolution plan or maybe at the application stage, how do we deal with? The answer to that question it is, no, you properly disclose in the information memorandum. Everything can be disclosed in the information memorandum.
Right, sir. Thank you. So 32A, so one more problem which we all face is 32A is for approval of plan cases, whereas 14 and 238 during CRP they support it. So some gray areas still exist, which again we'll wait for the apex court judgments. Surya sir, coming to you, connecting to this, because PMLA and MPAD Act, so Maharashtra Protection of Interest of Depositors Act is MPAD Act. Like every state has some kind of Protection of Depositors Act, and it's for protection to small depositors, right? So PMLA and MPAD provisions are kind of analogous when it comes to provisional and absolute attachment. There also there is a provisional and then a court gives absolute attachment. So what are your views on the interplay between MPAD and IBC, sir, regarding this?
So far as
See whether 238 overrides the provisions of MPAD Act has been dealt, by NCLAT in Namdari case, in NSCL versus Namdari. As you are aware, NSCL there was a big scam and NSCL was providing a platform for commodity trading, and where the trading members, having received the amounts, have failed to deliver the commodities. And then the provisions of the MPID Act were invoked. So, in Namdari's case, the Honorable Enclad said that the attachment, the provisions of MPID Act will have to give way for the moratorium imposed under Section 14. Of course, both the acts have a non-obstant clause. 238 under the IBC, and also there is a non-obstant clause under the MPID Act. And see, in number of judgments, when we are speaking about the overriding effect of 238, what has to be borne in mind is that supposing we are dealing with MPID Act, then the intention is to protect a set of depositors. Supposing we are speaking about proceedings under the Surface Act, it is about the creditors. But be it any act, we are talking when it is, say, ABG Shipyard, it is the claim or the right of the Customs Department. Mune Ispat, Income Tax Department. But whereas under 238 and especially IBC deals with the balancing of the interests of all the stakeholders. It is not one set of depositors. It is not one department or dues owed to some regulatory authority. So therefore, keeping these contours, the Honorable Enclad said that the attachment or the proceedings under MPID Act will have to pave way for the provisions of the IBC, and IBC would override. There are also some interesting judgments that are given by the principal bench in Delhi, in Tirupati Infra, and also by the Chandigarh bench in Sky High Infra. So where they said that the provisions taking into account all the Supreme Court judgments, be it ABG Shipyard or Mone Ispat, they have rendered that the provisions of 238 would override. But however, in Duran Foods, the Honorable Bombay High Court said that once the provisions are initiated under MPID Act, then the appropriate court where the RP can go and seek relief will be an MPID court, not the NCLT. See here, I think we have to sometimes, we'll be in a dilemma as to what will be the appropriate forum that the RP should approach. Whether he should invoke the provisions of Section 60, subsection 5, read with Rule 11, because it is a question relating to the insolvency process, or should he go under the MPID authority? And also when an MPID court passes an order. So whether the RP should file an appeal as provided under the MPID Act, or he should approach the adjudicating authority under NCLT. But the Namdari judgment is very clear, where it said that the appropriate authority would be the NCLT, and the adjudicating authority can give. And while dealing with this aspect in the Namdari judgment, the Honorable Enclad also dealt with the judgment rendered by the Delhi High Court in Nitin Jain's case. In Nitin Jain's case, the Honorable High Court said that it took a very close look at the provisions of Section 32A. It said that there will not be any liability on the part of the corporate debtor for an offense that has been committed prior to the initiation of the CARP. That is number one. Number two, the offense will cease to have an effect. When it is will cease to have effect? When the resolution plan is approved. Similarly, subsection 2 of section 32A says that no action shall lie against the property of the corporate debtor when the plan is approved. So that action shall not lie when the plan is approved or when there is a sale of the corporate debtor as a going concern. But what happens between the commencement of the CIRP till the resolution plan is approved? Is the attachment in force? Or is it lying in a suspended animation? In Shivcharan's case, which my learned friend has just stated, the Bombay High Court did not delve into that aspect. They said, we are not commenting as to whether what is the validity of the attachment of the proceedings. But once the plan is approved, it will cease to have effect. That is what in Shivcharan's case, the Honorable Bombay High Court said. But in Nitin Jain's case, they said that even the attachment proceedings, continuing the attachment proceedings may not be right.
Thank you, sir. But a very quick follow-on question to this, with a very crisp answer from you. Whether attachment vesting confers a title and shift in title to the, maybe the auction purchaser, or is it still in the name of the company?
Attachment and vesting are two different terms and have two different meanings. Attachment is a prohibition, is a bar from transferring, alienating. Say it can be transfer by way of lease, mortgage, gift, lien. So that is what the term transfer means. Transfer means sale or gifting or mortgaging or pledging. So attachment is a prohibition, is a bar. The title remains with the owner. It is only a prohibition. Say, supposing it is an attachment of an immovable property, be it, say, under the PMLA Act. The owner of the property, the house of an individual is attached under the PMLA Act. He can continue to stay in the property. Vesting is when, under the PMLA Act, vesting happens. See, after the attachment is confirmed by the adjudicating authority, and after that the proceedings are initiated under section 9, 10, and then finally the property is confiscated and it vests with the central government. Now, vesting, if you come to Insolvency and Bankruptcy Code, you come across the term vesting in section 154. Bankruptcy, when bankruptcy trustee on the commencement of the bankruptcy proceedings under section 126 of the code, the bankruptcy trustee is appointed. Then the property under section 154 vests. So here you can take the possession of the property. When the property is vested, you can take the possession of the property, whereas during attachment you are not in possession of the property. You can take the property into the possession, and that is why it is, if you see the provisions of the code, it is said he is a bankruptcy trustee. He is not called as bankruptcy professional. A trustee is who holds the property in trust. He is acting in trust. The property vests with him. Whereas, in the case of CARP proceedings or under liquidation, the property is not vesting. The RP is taking control and custody of the property. Liquidator also takes control and custody of the property, but the property is not vesting with him. But whereas in bankruptcy proceedings, there is a vesting. So it is like a transfer of title, albeit he is acting as a trustee, not as owner.
Right, sir. Thank you. But just connecting it to Mr. P.T. Joy on PMLA as well. So you said we should make proper disclosure in information memorandum, but suppose this asset which is attached is the core asset, and I put information memorandum, I invite resolution plans, but that asset, then I lose control of that because of proceedings. So will this be a material adverse clause for resolution applicant who is giving a plan based on that asset only? I mean, what happens to him?
See, this proposition, there is no finality for this. As I told you, this Saravagi case, it is pending with the Supreme Court. But even in this case, this Shivacharan case, recently in March, the Bombay High Court said once the plan it is approved, you will have to release the property. Now, conclusion will come only when the apex court it delivers a judgment. In one of the cases, I think it is the NCLAT, they said this attachment of the property under the PMLA is not for any recovery of the dues, not for any recovery. As far as the waterfall mechanism under 53 it is concerned, the government comes last. But here you are intruding, by way of attachment, confiscation under PMLA, the governmental authority, not for recovery of their dues. Even if even if there is a recovery, you are just bypassing the route, the waterfall mechanism you are bypassing. So you cannot bypass the waterfall mechanism. So section 32 will always prevail. See, more and more it is getting concluded that section 32 will prevail over PMLA provisions. PMLA provisions. So once, even if the attachment it continues, maybe whether it is civil action or criminal action, even if the attachment it continues, once the plan it is approved, they will have to release the property.
Thank you, sir. Now, moving on to Deenal, sir. Sir, a very pertinent question which keeps coming in a resolution plan, what will be the impact of taxation? So suppose we write back liabilities under resolution plan. How will taxation treat it? And there is an amendment in section 28 sub clause 4 which has made it more complex. So your views on that, sir?
I'll take 2 minutes more. We always have understood that when we claim an expenditure and when we subsequently write back that expenditure, it is always taxable under 41(1), what is called remission or cessation of a liability. Then you have section 28 subclause 4, which says any benefit or perquisite in the course of business, whether convertible into money or not. And then there has been different jurisprudence, what happens to a term loan from a bank or a working capital from a bank. Different high courts took a different view. Some high courts took a view that the working capital loan is on the nature of a trading liability, and therefore if you do not pay a working capital loan to a bank, then subsequent write back would be taxable. Term loan is on capital account and therefore that is not taxable. Finally, the issue was settled by Supreme Court in Mahindra and Mahindra. Though Supreme Court does not make a distinction between term loan and working capital, but Supreme Court said that 28(4) prior to amendment would only apply to a remission or a benefit of perquisite which is not in cash. It is only for a benefit of perquisite which is received in kind. And therefore, Mahindra and Mahindra took a view that the subsequent write back of a liability which is not claimed as deduction earlier is neither taxable under 41(1) or under 28(4). We had an interesting judgment of Chetan Chemicals Private Limited of a Gujarat High Court, where I took certain unsecured loans. I did not pay those loans, and subsequently I wrote back those loans to profit and loss account. The question was that whether those writing back of a loan is a taxable or not. Gujarat High Court said, I am not in the business of borrowing and lending money. I am into business of chemicals, and therefore what is the write back is a capital amount and not taxable under 28(4) or 41(1). The government was not happy with the judgment of a Supreme Court in Mahindra and Mahindra. And then we had a new section called 194R. So to align 28(4) and 194R, the Finance Act 23 amended the law. And now the law provides that whether it is in cash or whether it is in kind, if it is a benefit or perquisite in the course of business, then it is taxable under 28(4). So there are two questions. Whether a Mahindra and Mahindra judgment continues to hold good post the amendment. And today, if any company which is under CIRP, a plan is approved, and say for example, the banks are paid only 50% of their amount, what happens to the balance 50% which is returned back to profit and loss account? I would believe that even post-amendment, the write back of a principal amount or a working capital loan or a term loan, which is on a capital account, is neither a benefit nor a perquisite. It is not that I am benefited with this amount because I did not pay. It is only that I could not pay to the bank my obligation, and that obligation was ultimately settled at a particular amount. And that balance amount which is returned back, my personal view that it cannot be treated as benefit or perquisite. The second argument which I borrow from a Gujarat High Court Chetan Chemicals, that I am not in the business of borrowing or lending money. And therefore, even on this principle, the write back of a principal amount or a working capital should not be taxable under 28(4). 41(1) is anyway out of question because 41(1) would apply only when I claimed a deduction in the earlier year. The second part is an interest part, which I would believe would get covered by 43B, that if I have claimed deductions under 43B in the past, then I would have to pay tax. If I have not claimed and therefore I have disallowed because I could not pay to the bank, then anyway that is not taxable from a tax perspective. Operational creditors, yes, it is a 41(1) because it is a remission or a cessation of a liability. In some professional circle, again, people were arguing about 238, that whether an income tax liability, though under 41(1) is there, but IBC provides that IBC will override. The plan has been approved by NCLT, and therefore even an operational creditors should not get taxed. My personal view, it may not hold good because 238 also says which is not inconsistent with other law. And therefore, I would believe that operational creditors would get taxed under 41(1). As far as the term loan working capital is concerned, subject to what I gave my view, and as far as interest is concerned, it would be subject to section 43B adjustment. Thank you.
Thank you, sir. I think more literature will come on this definitely, because we talk about clean slate principle and then an SRA is asked to pay taxes on the write back, which is just a notional income. So maybe SRAs now will have to structure resolution plan in a way that it factors in the tax outgo also in a case they have to pay the tax.
Only one comment. I know that minimum alternate tax is practically not applicable today after the 25% regime. But if I still continue to have MAT credit and therefore I am in the old law, and if I am also subject to MAT, the write back of a principal amount of a bank loan would be subject to book profit. I know there are judgments of tribunals, of Bombay Tribunal and some other tribunals, which has taken a view that an amount which is not an income for the purpose of Section 4 of the Income Tax Act cannot be included for the purpose of book profit. But these are all judgments which are pending before High Courts and Supreme Courts. So one will have to see what happens. But from a pure accounting perspective, the write back would be routed through profit and loss account. And today under Section 115 JB, there is no exemption to exclude that write back for the purpose of computation. I remember that Institute in the past had made a substantial representation to the government, but government did not agree on certain counts. We can discuss offline. Maybe government has a point of view, but ultimately today 115 JB is still an open issue today with the judiciary.
Thank you, sir. Now moving a bit away from income tax, Surya sir, you handled a recent case which gave a very unique judicial precedent on Revenue Recovery Act versus IBC. Sir, can you just tell us a bit about that case?
It's a very interesting case where there was corporate debtor was operating a sugar factory, and then there were dues that were payable to the farmers because the sugar cane was purchased from the farmers, and dues were payable to the huge amount of dues were payable to the farmers. And prior to the commencement of the CIRP, the collector of the district where the factory is situated, invoking the provisions of the Revenue Recovery Act, has published an auction sale, and there was a bidder. That happened on February 9th. And then subsequently, that auction bidder came and he purchased and he deposited the amount, the minimum amount that was required to be paid, around 15%. And then on June 24th, the CIRP proceedings commenced. The RP, upon the commencement of the CIRP, met the collector and then informed him about the proceedings, commencement of the CIRP proceedings, and also cautioned him that, cautioned as well as requested him that he should not proceed with the sale. But the collector collected the balance amount after the commencement of the CIRP, and then even distributed those amounts to the farmers. And then on 30th November, he has issued the proceedings confirming the sale, and on 3rd December, he issued a sale certificate. So the RP moved an application before the NCLT that the sale should be set aside, because it is in the teeth of Section 14. After the commencement of the moratorium, the balance consideration was received, and then the property was sold. All the judgments like Indian Overseas Bank versus RCM Infra, where the Honorable Supreme Court dealing with a similar situation, where in that case, the CIRP commenced on 3rd January, part consideration received. That was under the Surface Act. The bank under the Surface Act collected the amount by way of auction on 3rd January, and then, on 3rd January, the CIRP commenced. Prior to that, part consideration was received, but the sale was confirmed on 4th March. Then the Honorable NCLT again set aside the sale. Matter went to NCLAT. NCLAT affirmed the order of the NCLT, and then matter went to Supreme Court. Supreme Court also said that the action by the bank, IOB, was untenable, legally untenable, and they have set aside the sale. But it was argued by the learned Solicitor General of India in that case, saying that the date of sale would relate back to the date on which the auction sale took place and the purchaser paid the price. So, invoking the provisions of Section 54 of the Transfer of Property Act, he said that the date of sale would relate back to the auction date. That argument was rejected. So, here also before the NCLT, all the case laws like Sundaresh Bhatt versus ABG Shipyard and also Anandrao Kurada. There is another Orissa High Court judgment where the Orissa High Court, for the recovery of dues of the workmen, has auctioned the properties, directed for the auction of the properties after the commencement of the CIRP, saying that these are workmen dues, so therefore moratorium would not be applicable, and the Orissa High Court said that the properties should be auctioned. But the Honorable Supreme Court again has set aside the judgment. So, keeping in view all these judgments, we have quoted a number of judgments there, like Duncan T, which talks about the overriding effect. What was brought to the notice of the Honorable Adjudicating Authority is the primacy of IBC over the other laws and the overriding effect of Section 238 read with moratorium, that the property could not have been sold in the teeth of these provisions. And also there is another judgment of the Honorable Enclave called ECI Infra, similar facts, where the part consideration was paid after the commencement, initial amount paid before the commencement of the CIRP, and the sale was confirmed. So, see, RPs will always, I think, come across these kind of situations where, knowing very well about the overriding effect, the non-obstant clause, still the authorities, be it under the MPID Act or under the Revenue Recovery Act, these kind of situations are emerging, even though the law is more or less settled that after the commencement of the CIRP, such actions cannot be taken. So finally, the sale was set aside. However, just the other day, 2 days back, the Honorable NCLAT has passed an order to maintain a status quo as regards the property purchased by the successful auction purchaser. Because I think the NCLAT was thinking in terms of equity, that he is a bona fide purchaser. But even though he is a bona fide purchaser, the same was the ratio even in IOB versus RCM Infra. There also the property sold, there was a bona fide purchaser. But still, the NCLAT felt that at a preliminary stage of hearing and without getting into the details, maybe it would be unwise not to allow the RP to continue with the CIRP process, because if the CIRP process continues and the property is sold or is given away as part of the resolution plan to an SRA, then the auction purchaser may be deprived, because now he cannot even neither get back his property, and to recover his amounts he should proceed against the collector, because the collector has already distributed the amounts to the farmer. So I think maybe considering the equities, maybe the Honorable NCLAT thought it fit to direct that there should be a status quo.
Thank you, sir. That's very interesting. Probably one major question before we take the crisp concluding questions. Dinar, sir, any views on interplay of IBC versus indirect taxes?
So from an indirect tax perspective, the position of law would be same. The only thing is that when an asset is sold on a slump sale, even under liquidation, the GST would not apply. But if I sell assets on a piecemeal, then GST would apply. Now, whether it is a slump sale on a going concern, the GST authorities, my experience is normally follow the income tax principle under 50B, and there is a definition of a slump sale under the Income Tax Act. Now, the Supreme Court in ABG Shipyard on a customs versus the IBC, again Supreme Court, and we have section 142 capital A under Customs Act, which specifically says that the IBC will override the Customs Act, and therefore the Supreme Court also took a view, and there a particular situation was distinguished by Supreme Court by reversing the judgment of the NCLAT that ultimately the Customs Act could not override the IBC, and therefore the IBC supremacy was also settled. So I would believe that from an indirect tax or a direct tax, the position of law would be same. I know about the Rainbow Papers principle where the secured creditors of the government was slightly taken a different view, but I would believe that that is on a particular language of the Gujarat VAT Act. And there the decision was taken. That decision is slightly modified by a subsequent judgment of a Supreme Court on a language. But I think let's see what happens on ultimately the primacy of the financial creditors, which is the government dues.
Thank you, sir. Now, coming on to the concluding queries or questions to Vikas Bhai. What top challenges are faced by RP on account of these interplays? What are the top challenges which an insolvency professional faces?
Yeah, thank you. So first and foremost, we need to understand the nature and business of the CD. That is very much important. If we do not understand the nature of the CD, then it becomes very difficult to carry out the CIRP process. That is foremost. So if we understand that better, then most of the problems are solved, I would say. Another thing is, we cannot be expert on every subject. As I said earlier, that we need to act like a CFO. So whatever the processes, whatever the compliances that are required to be done, we need to ensure that who best would be doing this. And we need to get to the people and need to get the things done. But yes, two challenges come before this. One is documentation. So documents are not available. In case of the CIRP companies, most of the time we are not having the accounts, books and all these things. So suppose if I have to do the compliance with the ROC, I have to do the filing with the ROC. But if I am not having the books of accounts ready, then how these things can be done? And see, as I said, that in 32A, the immunity is there to the RA. But if it talks about RP, he has to do the compliance, there is no immunity. But if the opening balances, if the previous accounts are not available, then how to get all these things done for the years, say, subsequent years when he is appointed? So then again, that becomes a key challenge. So we have to decide based on the various circumstances, but we need to ensure that it should not be like we should leave the things whatever the way they are. We need to be very sincere and very particular about the things so as to do this. Yes, some decisions again are making our lives miserable, just like the case of Jet Airways. If we talk about the PF and all these things, the life changed after Jet Airways. And the RAs are also not able to take informed decision that what is going to happen to them. Another one was Rainbow, just sir discussed, that again created a lot of chaos. Then the two most important thing in doing this, the nightmare or I would say whatever, one is, as I said, documents, another is the resources. So for everything that you need to do, maybe you need to do something with income tax, with the ROC, you need to have higher professionals. You have to pay fee to those people because you alone cannot do all these things. You are ultimately to manage the things. So to convince the COC on those parts, because already they are like bleeding, and apart from that, still you need to spend money. So the fee and all these things. So how to convince those people, that again itself becomes a challenge sometimes. Yes, they are considerate, right? We need to have the integrity, transparency. If all these things are there, for sure, they would be understanding the things. But it is ultimately the decision makers are the people, the decisions are being taken from the top and not at the people who are participating in the COCs. So sometimes they are also having their own set of challenges. They, even though they want to help us, they are with us, but they cannot help us. Recently in one of the bank, that they have taken a decision that when the case, the CIRP period you have completed, and if it has been filed with the Honorable NCLT, say for liquidation. So say for example, the order for liquidation is passed after 6 months. So the decision is like they won't be able to pay you the fee for those 6 months. They'll be paying you the fee only till the amount or till the date of when it was filed for liquidation. So the practical challenge as an insolvency professional with us is, Sunit Bhai is also with me in this particular point, that the practical challenge is for all those 6 months, he has to comply with all those things because he is not absolved from the duties. He has to consider those facts. For small these things also, he may be in trouble. So friends, my humble suggestion or advice to all the IPs, I am also heading the IBC committee of WIRC as of now and meeting so many IPs. Based on that, I would be saying that we need to be very, very thoughtful about the fee that we are charging. What happens ultimately? Tomorrow in the court, we cannot say, or to the IBBI proceedings, we cannot say, ki atla paisa ma to atlo thai. Means we have charged this much only and we can do this much only. No, we can never say that. Ultimately, The responsibilities that are on our head, on our shoulder, we have to discharge those responsibilities. So we have to appropriately understand. And just let us take a cue from or clue from what our honorable NCLT member said today, that there are only 2,400 AFAs live today as of now. The live number of AFA is 2,400. And the number of cases plus the personal guarantee cases, if we see together. So there is enough for our need, but not for our greed, I would say. Everybody would be getting their share. The only thing is, we need to be considerate. I won't say that we should ask for exorbitant fee. But the only thing is, we must understand the nature of the proceedings that are to be taken care of. And ultimately, if we are able to charge appropriate fee, if we are able to deliver quality, I'm sure the COC members would always be considerate. They also understand our problem. They are also with us. But there are certain challenges which are inevitable. So these things are the key, I would say. So we need to understand that we have to safeguard ourselves along with the CD. If the otherwise, what would be happening is like liquidation before incorporation. Before our flight is taken off, it would be just landing or crashing. Thank you.
Thank you. Thank you, sir. Joy sir, very quickly, what advice do you have for RPs or legal support of RP to handle investigations during CRP in PML?
In one of the cases, the NCLAT said the RP should not be put into the trouble of, let us say, attending hearings, giving statements, maybe when called by the PMLA authorities. Those things, the RP should not be put into. But, see, if there is an attachment, supply with the, let us say, the provisions of section 32A, 238, 14, and also the judgments so far, which we narrated here. But otherwise, just like a victim or just like an accused, see, RP cannot be treated just like an accused. So this is very clear. It is stated by NCLAT in one of the judgments. I remember, I just forgot the name of the judgment. This is stated. And whether they will, let us say, emprise the provisions of section 32, 14 and 38, 238 and all, we don't know. Because with the many other departments, we have the issue. We have the issue with, let us say, the Provident Fund authorities, how they are treating the RPs. PMLA authorities, because of the off-late developments in our country, they do believe that they are supreme to every law. They are supreme to every law. A situation it is created, either knowingly or unknowingly, such a perception it is created in our country. But one thing it is very clear, RP cannot be equated with an accused person under the PMLA. Maybe we can supply the information, but he cannot be called and made to sit in the corridors of the enforcement directorate. Then if that is happening, RP will not be getting time to bring a resolution. His duty is to bring a resolution, run the CRP process. It is not like a layman that he is an officer of the court.
Thank you, sir. Dinal sir, any top 3 advices for an insolvency professional? I'm sorry, I'm cutting down the points.
Be serious to your profession. Every profession has hazards. And what on a lighter tone Vikas was saying, कि જેટલી ફી મળે એટલું કામ કરવાનું, એટલે પેલી ઓડિટમાં અડધી ફી મળે તો અડધી સિગ્નેચર કરવાની અને પૂરી મળે પછી જ ફૂલ સિગ્નેચર કરવાની, એવું ના હોય. So I think my personal view, getting associated with IBC from day one, though it is not my cup of tea as a core subject, it's a great opportunity for professionals. But 2, 3 on a lighter tone, don't do this as a time pass profession. What people do, that I will go to income tax in the morning, afternoon I will sign certain tax audit report, and then if time permits, I will also do insolvency. Every profession needs a seriousness and a commitment, whether I get a work or whether I do not get a work. Number 1. Number 2, fees and a profession, it's an individual choice. Whether do I do work for 100 rupees or do I work for 1,000 rupees, it's an individual choice. But having accepted an obligation or a responsibility, you have to put your everything to your professional ability and knowledge and capabilities. I don't think then the fee should be in any way come in discharge of your responsibility. And the third is the ethical and integrity. Of late, sometimes you hear wrong things about IPs. And therefore, integrity and ethical practices, and you would have seen certain IBPI orders where certain actions were taken against certain professionals. So I think if these three principles are followed, I would personally believe it's a great profession. And it is not only about acting as an IP. There are many incidental professional activities like valuation, like forensic, like supporting the IP and everything. And therefore, I think those incidental activities also is a great opportunity for all of us. Thank you.
Thank you, sir. Surya sir, your top advices for protecting and preserving value of assets.
For protecting and preserving the value of the assets, I think the first thing that the IRP, when he is appointed, what he should do is do a proper diligence as to what are the properties, be it movable or immovable properties especially, and check where all the proceedings are taking place, because you will have a management which will refuse to cooperate despite an order under Section 19. Right? You will not, many of the RPs, face this challenge of non-cooperation, not giving the details of the pending proceedings. So you are not aware whether, some MPAD proceedings are, for instance, the one case where I am handling, the corporate debtor is situated in Hyderabad. Registered office is in Hyderabad. MPAD proceedings are taking place in Mumbai under the MPAD Act. So, run a proper due diligence as to where all the proceedings are taking place, which is a difficult task. Management will not give you all the details, so you may have to take the assistance from a third-party agency. There are third-party agencies which run this check for you on payment basis. There are certain portals that are available where on payment basis you will get, maybe you will not get on e-courts portal, but these portals will give you all the list of cases, and once you are aware of these proceedings, then I would say the first task of all the things that you do when you are appointed as an IRP, after the public announcement that you carry out, don't assume that your public announcement is seen by everybody. And the adjudicating authority always asks the RP as to what steps have you taken. If you say public announcement was made, that is not enough. So you will have to, the first task that you do is, even to take control and custody of the assets, you should know where the assets are and what are the proceedings lying against them. So immediately inform all the authorities. The next day, file a memo, file an affidavit stating that the CIRP has commenced with this CD. Please don't proceed further. 238, moratorium, inform all the authorities. That is the first and foremost thing. You should inform all the, maybe proceedings are pending before the civil court, high court, or MPAD court, or PMLA court, adjudicating authority, wherever. Just take these steps and give wide publicity to the fact that the CIRP against this CD has commenced, and that any action will not be legally tenable.
Thank you, Joyce, sir. Before we move on to the conclusion of this session, I would like to ask our audience members if they have got any questions for our talented panelists. Any questions, please? Yep.
Thank you, sir. As Dinal sir appraised the rainbow paper mills order, which is actually turned down by Honorable Supreme Court by another case in the matter of Raman Ispat. So still the government authorities are pressing that state government's dues are secured assets or secured dues. So whether the matter ends or still it's a debatable.
I would believe that it is a Supreme Court judgment, so it is always debatable. But I would, on a serious note, one will have to examine the language of each law and then come to a conclusion, because Supreme Court in Rainbow interpreted a particular language of the Gujarat VAT Act. Now, if that language is not there in the other relevant statutes, then maybe that principle may not apply. So one will have to follow the language of a particular law and then decide that whether the Supreme Court judgment of Rainbow still holds good or not. That is what is distinguished in a subsequent judgment.
Adding to that, see, if you see the Greater Noida judgment, where they filed an application to be classified as a financial creditor, and then the RP treated it as an operational creditor, and they did not file any revised claim, and finally, the Honorable Supreme Court, of course, dealing on a different aspect, whether the order approving the resolution plan can be recalled or not, said that Greater Noida is a secured creditor. Again, they said that it is a secured, maybe secured, whether, they did not delve into the aspect whether it's a financial creditor or operational creditor, but they said that it is a secured creditor, because the agreement, the agreement with the corporate debtor and the Greater Noida, it provides a clause that they will have a charge on the property of the asset. See, even in Rainbow also section 48 of the Gujarat VAT Act, it said that they will have a charge. So when we are dealing with any state enactment, maybe we have to see whether there is that kind of language that is employed in that statute. Greater Noida also is dealt that aspect.
Thank you, sir. As we come to the conclusion of this session, I would like to start with thanking Badri sir for excellently moderating the event. I would also like to thank Deenal sir, Surya sir, Joy sir for providing valuable insights into this, and also would like to thank Vikas sir, being the voice of RP and just discussing what we go through as well. Leading into the next session, I would like to invite CA Tarjani Shah to lead us into the next session, please. Thank you.